The story starts with a sound, the clicking of keyboards, the hum of data servers, and the quiet pulse of the financial system awakening. It's early 2025, and something massive is happening behind the scenes of the crypto world. Institutional money, the so-called smart money, is flooding into Bitcoin at a pace we've never seen before. Over $30 billion has poured into Bitcoin ETFs in just a few months. That's not retail money. That's Wall Street money. That's pension fund, insurance company, and hedge fund money. And the question everyone's asking is the same. Right finger, are we heading to $125,000 Bitcoin? Before we dive in, if you're serious about understanding how AI and finance are rewriting the rules of wealth, hit subscribe right now. Because in the next few minutes, you're going to see how this ETF surge could reshape crypto forever. Back in 2017, crypto felt like a Wild West. No rules, no regulation, and certainly no ETFs. Fast forward to 2025, Bitcoin is now an institutional asset class, approved by regulators, traded on the same platforms that handle Apple, Tesla, and Microsoft shares. That's a revolution hidden in plain sight. An ETF, an exchange-traded fund, lets investors buy Bitcoin without actually holding it. It's clean, regulated, and safe for big funds that aren't allowed to touch crypto wallets. And when the SEC finally approved spot Bitcoin ETFs, the floodgates opened. In the first 30 days, over $10 billion flowed in. By the end of Q1 2025, more than $30 billion. That number matters because it represents trust, institutional trust. When pension funds and retirement plans move billions into an asset, they're not gambling. They're hedging the future. So, why are they buying now? Let's break it down. First, inflation. The US just crossed the 3% mark again, a psychological barrier that terrifies the bond market. Every time the Federal Reserve hints at rate cuts, investors rush to protect their purchasing power. Bitcoin is now seen as digital gold. Second, the AI boom. While tech stocks soar, investors are realizing that AI needs massive computing and energy, both areas that Bitcoin's infrastructure already dominates. AI companies are quietly buying into Bitcoin mining to power the data centers. The two industries, AI and crypto, are merging faster than people think. Third, global instability. From trade wars to currency devaluation, people want an asset that isn't controlled by any government. Bitcoin fits that story perfectly. Now, here's where the ETF story gets crazy. When you buy a spot ETF, you're not buying a derivative, you're buying actual Bitcoin that must be held in custody. That means every time a new investor pours money into BlackRock's IBIT or Fidelity's FBTC, real Bitcoins are being taken off the market. And supply is finite. Only 21 million coins will ever exist. So, what happens when demand from giants rises while supply shrinks? Prices don't just go up, they explode. This is why analysts from Bloomberg and JP Morgan are already projecting targets of $120,000 to $150,000 by year-end 2025 if ETF flows continue at this pace. But there's a catch. Retail investors, that's you and me, usually get in late. By the time mainstream media starts talking about Bitcoin at $100,000, the smart money has already taken profits. That's why understanding what's happening now is so important. ETFs change the game because they lock up supply and give institutions easy access. But they also centralize ownership, a paradox for an asset built on decentralization. Imagine a future where 80% of Bitcoin supply is held by funds like BlackRock and Fidelity. That's powerful and dangerous. Halfway through the video, let's pause for a reality check. If you're still watching, you're part of the top 5% who actually care to understand how wealth moves. So go ahead, subscribe now, because every week we unpack how AI and finance are rewriting the rules of money. Let's talk numbers. In January 2025, BlackRock's IBIT held over $20 billion in AUM, assets under management, making it one of the fastest growing ETFs in history. That's more than most S&P sector funds. Even Canadian ETFs, like Purpose and Sea Galaxy, are seeing record flows as cross-border investors join the rush. These aren't crypto fanboys. They're retirement fund managers moving billions for their clients. So, what could drive Bitcoin to $125,000? Let's do some simple math. If current ETFs continue adding roughly $1 billion per week in net inflows and the average price impact per $1 billion remains around 2%, that compounds to a potential plus 100% move by mid-2025. Combine that with the April 2024 halving event, which cut mining rewards in half, and you have a perfect storm. Lower supply plus higher institutional demand equals price acceleration. But price isn't the whole story. Bitcoin ETFs are also changing how people think about risk. For the first time in history, investors can add crypto exposure to a 401k or RRSP without needing a wallet or exchange. That's massive for mainstream adoption. Yet some critics warn this could create a synthetic Bitcoin economy, where paper claims outnumber real coins held in custody. And if that happens, we might see a replay of what gold ETFs did to the physical gold market: more liquidity, less transparency. Still, optimists argue that ETFs bring legitimacy, not corruption. They say the moment governments and institutions embrace Bitcoin openly, its volatility will drop and its market cap will skyrocket past $2 trillion. If that happens, the path to $125,000 per coin is not just possible, it's inevitable. And that's why you're seeing YouTube titles, Twitter threads, and CNBC panels talk about this ETF wave as the beginning of Crypto 2.0. Now, imagine this. You wake up a year from now and Bitcoin is at $125,000. Everyone's talking about it. Your friends who laughed in 2023 are suddenly asking you how to buy. The media calls it a surprise rally. But you know it wasn't a surprise. You were watching the money flows all along. That's the difference between guessing and understanding the game. So where does AI fit in this story? AI is now used to analyze ETF inflows, predict liquidity zones, and detect momentum before the public notices. Tools like Whale Alert AI and Smart Flow Predictors are giving retail traders institutional level insight. This is the era of AI-assisted finance. The edge is no longer who has the most capital, it's who has the most data. So, yes, $125,000 Bitcoin is possible. But the real question isn't, will it happen? It's, who will be ready when it does? Because the people who educate themselves now, who learn to read ETF flows, on-chain data, and AI signals, will be the same people who don't panic during the next crash. They'll see it for what it is, another pattern in the code. So if you're ready to be one of those people, subscribe right now. Because the future of money isn't built on luck, it's built on understanding. And here's the final truth. This $30 billion wave is not just a trend, it's a transfer of power. From old finance to new finance. From human fear to machine logic. From emotion to data. The only question left is, will you be watching from the sidelines, or riding the next move before it happens? Because by the time Bitcoin hits $125,000, the window to get ahead might already be closed. Stay smart. Stay curious. And as always, trade with clarity, not fear. End of script.